Welcome back to Tax UK, the practical tax channel, where we specialise in how-to tax videos. Today I'm going to be showing you how to complete the 21-22 self-assessment tax return as a self-employed individual. This return covers the period from the 6th of April 2021 through to the 5th of April 2022, both the submission of the return itself plus the payment of any tax due is normally due no later than the 31st of January 2023. Now, this will actually be the third time that I've made one of these tutorials, and they've always done very well. So I'm going to stick with the same three assumptions that I always make, and I'm going to follow the same format as well. So the first assumption that we have here is that self-employment is the only type of income, the only source of income that I'm reporting here. It's also assumed that registration for self-employment has already taken place, and access to the government gateway or a government gateway account is available. And then finally, I'm also assuming that the numbers are already prepared. So we know what the income figure is and we know what the total allowable expenses are. If you do have other types of income, make sure you subscribe to the channel and check out the full playlist where we cover rental income, capital gains, employment income, so you should have all your questions answered. You can also use the details that are up on screen now to book a paid-for video assistance call, which will help you answer any of the smaller questions that you might have. We'll now jump across and share the screen. You can also slow down the playback of the video. If you want to follow this through, maybe switch it down to 0.75 or 0.5 playback. So here I am, I'm actually on the second page of the return. I've logged into my government gateway account. I've followed the link to click on or file the 21-22 self-assessment tax return. You'll then need to confirm some personal details like your address, making sure it's all up to date, your date of birth, your marital status. You can see that here at the top of the page. So if you go ahead and do that, I've skipped past it for obvious reasons. And then you have a few questions to answer. Now, these questions are just trying to figure out, first of all, if you or your spouse are registered blind, because there can be additional allowances available. And then second of all, there are two questions regarding student loan. I don't have any student loans in this example, so I'm going to click no to these. But if you were made aware that you have student loans repayable, then you would need to inform HMRC by clicking yes to one of these two questions here. We then move on to the tailor your return section, and you can see on the right hand side we've got a bit of a tracker to see how we're progressing through the return. So we're on section 3, tailor your return. We've covered the welcome and we've covered the tell us about you section. So the tailor your return section is made up of 3 pages, and essentially this is HMRC asking you a bunch of yes no answer questions in order to determine how many pages of the tax return you actually need to fill out. Now, it's quite useful, the fact that if you don't have rental income, they're not going to put that section of the return in front of you. If you don't have any capital gains, then they're not going to put that section in front of you either. So you only fill out the absolute minimum for your situation. But you need to work through these questions answering yes or no to any that would apply to your situation. So we will go through these one by one. But remember, in this example, all we have is self-employed income. So most likely we're going to answer no to a lot of these questions and yes to only one of them. The first question asks, in the tax year, the 6th of April 2021 to the 5th of April 2022, were you an employee or agency worker in the year to the 5th of April 2022? So directors and office holders are considered to be employees for these purposes. So if you were a director of the company, then you would normally need to inform them by saying yes here. Of course, if you are under PAYE employment and you have a secondary source of income, you would also need to say yes. However, in this situation, we don't have that. We only have the self-employed income. The second question refers to self-employment. So this is going to apply to my example here. Was your turnover more than £1,000 in total from all self-employments? And you can click on the help, which is the little link below, to get more detail on that, like you can with every question. So first of all, they say £1,000 because technically you can receive up to £1,000 tax-free. It's known as a trading allowance. So if you have self-employed income and your turnover is less than £1,000, then the trading allowance will cover that in full, and you don't actually need to inform HMRC in that situation. So even if you had a little bit of self-employed income, it would be considered more like a hobby, and you could tick no, and you wouldn't have to tell them anything. We should point out, though, that they ask if that regards to all self-employment. So if you had multiple trades, maybe you're a plumber and you do some self-employed plumbing work, maybe you do some selling on eBay. If you had £900 of income from each of those, then your total from all self-employments is £1,800, and you would need to inform them. So just bear that in mind there. In this situation, this is what will apply to my example. So I'm going to tick yes, and then you'll be prompted below to give a little bit of information about your self-employment. Again, if you had more than one self-employment, then you would let HMRC know here by selecting how many you had. But typically most people, and again in this situation, we're just going to have one. I'm going to use my YouTube income or my YouTube self-employment as our example. So I'll put the name here. Don't worry too much about the name of your self-employment. A lot of people worry about this. For self-employed individuals, there's not as many restrictions on naming your business. And certainly for these purposes, this is just a reference for HMRC to know which of your self-employments you're referring to. For companies, there are very strict rules, and you can check out my video on naming your company, but there are very strict rules where you can't name your company the same as somebody else. For self-employed individuals, at this point, we don't really need to worry about that. It's more of a reference for HMRC. Next question, were you in a partnership? So a partnership is similar to self-employment. However, you're splitting your income with another person. You would know if you were in a partnership because you typically would have a partnership agreement in place, which is a legal document which will determine how you split your income and how the partnership works. So again, we'll say no to that question. But tax-wise, it works in a very similar way. You just get taxed in the same way you get taxed on your self-employed profits, but only on your share of the partnership income. So whether that's 50% of the income or 20%, that would all be detailed in that partnership agreement. Did you receive income from UK land or property, including some foreign property, over £1,000? Please check help before selecting. Now, it always says please check help before selecting, because you can see there's a drop down which gives you a little bit more information and then usually some more detailed guidance as well. But typically, the same rule applies. So if you do have some property income, some rental income, maybe under £1,000, there is another allowance here. So a property allowance, which will cover that. So typically, again, if you had £500 of property income, you don't actually need to tell HMRC because it's going to be covered by your allowance. Now, you also get one allowance for property and you get one allowance for trading income up here. Remember, we mentioned up here, there's another £1,000. So if you did have both types of income, then you can benefit from two separate allowances there. You don't need to choose one or the other. Again, we're going to say no to that one here. If you received any foreign income, do you need to complete the foreign income section? I'll say no, but if you did have employment overseas or rental income overseas, you might need to select yes here. If you disposed of chargeable assets or had chargeable gains, or you wish to claim an allowable loss or make any other election, you can see down here what I'm looking at. Do you need to complete the capital gains section of the return? Again, please check the help. So capital gains section of the return refers to capital items. So maybe if you buy and develop and invest in property, so not your main property, but you have additional rental properties, and you might need to complete a capital gains section when you dispose of one. Maybe if you buy and sell shares, I do a lot of buying and selling shares. You can actually check out my other channel, Trader_UK, where we cover lots of trading content and investing content. Trader_UK, similar to the name of this channel. Go and check that one out as well. But yeah, it would apply to that situation. Cryptocurrencies as well. If you're buying and selling cryptocurrencies, that would normally fall under capital gains. Again, in this section, in this example, we're going to say no and move on to page 2. In the tax year, did you receive any interest, for example, from UK banks, building societies? So this is unlikely to apply at the moment because people typically don't receive any interest because interest rates have been so low, it's not worth keeping your money in a savings account. However, this may become more applicable over time as interest rates are starting to go up now. So we may see more people completing this section of the return. In our example, we'll say no, but just bear that in mind. It's your bank interest, building society interest would need to be declared as well. Did you receive any dividends, for example, from UK companies, authorised unit trusts, open-ended investment companies, foreign companies up to £2,000? So that does sound a little bit complicated there, but for most people, if you hold shares in a UK company or any overseas company for that matter, and you receive dividends, maybe you invest in Google or Apple or Tesla, if any of those companies ever pay you a dividend, then you may need to declare that on your self-assessment tax return. Luckily though, there is another allowance, a dividend allowance of £2,000, which means the first £2,000 of dividend income is actually tax-free. So I'm going to say no to this example. Did you receive any UK pensions, annuities, or state benefits? For example, state pension, occupational pension, retirement annuity, incapacity benefit. So a lot of people don't realize this, but when you pay into a pension throughout your lifetime, even when you receive that pension, even when you receive your state pension from the government, when you receive it, it's still taxable income. If you exceed your tax-free allowances, your personal allowance, you would still pay tax on that income. So that also gets declared on your self-assessment tax return. As most of my viewers tend to be under 40, although I appreciate there are older viewers as well, but most viewers tend to be under 40 on this channel. I doubt too many people or too many viewers are receiving UK pensions, as of course you need to be over retirement age for that. So we'll say no to that one. Did you or your partner, if you have one, get child benefit during the year 21-22? This applies if someone else gets child benefit for a child who lives with you and pays you for the child's upkeep. So child benefit's an interesting one because if you or your partner even claim child benefit and then earn higher rate income, so you cross that threshold of higher rate tax, which is around 50,270, I think it is at the moment, then they actually start to claw back that child benefit, and eventually they take all of it back. So you are no better off having it in the first place. So that's what they're looking for here. And it's always the higher earner. So even if you claim the child benefit between yourself and your partner, if your partner earns 30,000 and you earn 60,000, then you'll pay the child benefit tax charge. It's called a high income child benefit charge. You can see it down here. And again, you can find more guidance in the details below. But just bear that in mind. If you are a higher rate taxpayer and you receive child benefit, there can be an additional charge when they start to recoup that child benefit there. Did you incorrectly claim an amount of coronavirus support payment? Just be careful with this one. This isn't asking if you claimed coronavirus support payments. Lots of people would. This is asking if you claim them incorrectly. So by answering yes to this question, you're almost certainly going to trigger an investigation or certainly a phone call or some further work. So we're only saying yes if you incorrectly claimed it and you want to declare that now. But if you correctly claimed it, then you would still say no. Did you receive any other UK income? For example, employment lump sum, share schemes, life insurance gains. So this is HMRC's way of trying to cover all bases. There can be types of income which kind of slip through the net. Maybe, like it says here, if your employer pays you a lump sum, which maybe hasn't been taxed, if they paid you in shares, it can often fall through the gap. So by putting this question in here, you're meant to declare any other UK income. Have you made any income tax losses in the year 21-22? I'll say no to that one. Don't get confused here. If you have self-employment and you make a loss from your self-employment, that is not what this question is asking. That's a trading loss. That is different. This is asking, have you made any income tax losses? Typically, that refers to commissions that you received or maybe untaxed incomes. So it's not quite, it's not worded in the best way, but just be careful of that question. It's not referring to self-employed losses. Again, you can read the more detailed guidance down here, and it does tell you self-employed profit and losses should be shown in the self-employed section. So it's clearly telling you that's not what we're referring to here. We're talking more about casual earnings or commission. Okay, so always use that drop down. It can give you a little bit of further guidance. Are you liable to pension savings tax charges, or have you received payments from overseas pension schemes? I'll say no, but just to give you a bit of guidance or a bit of advice here, pension savings tax charges normally kick in over £1 million of pension savings. So it should say in here £1,073,100. So you have to be, have to save a lot of money in your pension for that to apply. But if you think about it, HMRC and the government really incentivize us to save into our pensions. They give us really good tax relief, which will top up our pensions and help us to save for retirement. However, that can be abused by high earners, where they earn so much money. If they just paid it all into a pension scheme, they could get lots and lots and lots of tax relief and do even better than everyone else in retirement. So what HMRC do is they apply a pension savings tax charge. So eventually, if you keep paying into a pension, you often get that tax relief initially, but they'll put a tax charge on anything over £1 million in a pension pot anyway. So it ends up becoming it's not beneficial for those higher earners. So it's just to make sure it's an even playing field for everyone. On to page 3 of tailoring your return. You can see at the top what progress we're making here. Did you make contributions towards a personal pension plan or retirement annuity? This does not include payments you make to your employer's pension scheme, which are deducted from your pay. So I'll say no to this one. But if you pay into a pension plan through your employment, if you think about it, your pension contributions get taken away and separated before you pay any tax. So you don't pay any tax on any money, usually, that you pay into your employment pension scheme. If, however, you pay into a personal pension scheme, which is usually a scheme that you arrange privately outside of your employment, then you've normally already paid tax on your income from your employer, and then you put it into your pension scheme, but you've had tax deducted from that income already. And you shouldn't have, really, because pension contributions should be you should attract tax relief. So what HMRC do, if you do pay any money into a personal or private pension plan, then HMRC will actually give you the tax relief. So you get a bit of a tax deduction here when completing your self-assessment tax return, if you say yes to this box and if you've paid into a personal pension plan. Did you give to charity? So again, there is tax relief available if you're giving money to a registered charity. Typically, though, this is more beneficial if you're a higher rate or additional rate taxpayer. So again, where you're earning more than £50,270, I think it was in this tax year, then you'll get good tax relief. If you're a basic rate taxpayer, if you earn below that amount, then typically there's no real benefit. The reason being, when you give to charity, you'll normally tick a little box that allows for gift aid. So gift aid allows the charity to claim back that 20% tax that you've already paid. So if you donate £80 to charity, the top up they actually get is about £20. Or is £20, and they actually end up getting £100, even if you only donated £80 but ticked that box. So it tops up your contribution by taking the tax from HMRC. So basic rate taxpayers wouldn't actually be able to get any relief from that. If you're a higher rate taxpayer, though, or additional rate, then you would have paid 40 or maybe 45% tax on that income. The charity would have only claimed 20% from HMRC. So again, by ticking yes here and giving HMRC the details, you may be able to benefit from an additional 20 or 25% tax back. Okay, so that's why they ask you for that one. If you or your spouse or civil partner were born before the 6th of April 1935, do you want to claim married couples allowance? Now, I said most of my audience is below the age of 40. I appreciate there are probably quite a few people watching who are maybe over the age of 40, but I doubt there are too many people watching that were born before the 6th of April 1935. If you were, though, then there were additional allowances available called the married couples allowance, which still applies if you're over that age, if one of the couple is over that age. But nowadays, it won't apply to most of the younger audience. Below, though, we have the more modern example. So do you want to transfer 10% of your personal allowance to your spouse, civil partner? If you already have a transfer in place, then select no, as it will be included in your calculation. So again, here, this is very similar. You can see this one's called the marriage allowance. Don't confuse that with the married couples allowance, which we just looked at above. This is the marriage allowance. So if your partner or yourself are a lower earner, if you earn below the personal allowance, below that threshold, that tax-free threshold, then you can actually often benefit by transferring some of your personal allowance to your spouse. Essentially, then your spouse would be able to earn more income tax-free, but that only works where you have one low earner in the relationship. Do you want to claim other tax reliefs and deductions, for example, community investment tax relief, venture capital trust shares, maintenance alimony payments? So 99.9% of people will be ticking no to this box like I'm going to. But if you want to click on the link below, there's a great long list of different allowances that can be available and have been available throughout the years. You can see here, seafarers earning deduction, foreign earnings not taxable in the UK. So these would be quite rare, actually. But if any do apply, then you can let HMRC know there. Have you had any 21-22 income tax refunded or offset by us or Job Centre Plus? Don't get confused here. A lot of people will have received maybe universal credit at some point in the tax year. Universal credit is not taxable. It doesn't go on your self-assessment tax return. So that's not actually what they're referring to here. However, what does happen quite often, if you leave employment during a tax year and you're not going to be working again in that tax year, you can either wait till the end of the tax year and HMRC will look at it and say, do you know what, you paid too much tax. We thought you'd work all the way through the year, and that's how we were calculating your tax. And they'll give you your repayment at the end of the tax year. If you know you're not going to be working and you've overpaid tax, and you can actually send in a form to HMRC to trigger the tax return immediately. And that's pretty much what they're asking here. So if you do that, you would need to let them know here. But universal credit doesn't go on the tax return. Did you have a tax advisor? So if you do pay an accountant, you have an engagement with an accountant or tax advisor, you can let them know here, and you can usually provide them with the details. We'll say no to that one in this case, as I'm submitting my own return here. Have you used one or more tax avoidance schemes? Hopefully not. This is the funny thing about tax avoidance. Tax avoidance is actually okay. It's a funny word and people don't like it. Tax avoidance is okay. If you do any tax planning, for example, up here, do you want to transfer 10% of your personal allowance? That's not what they're referring to down here, but technically, that is a type of tax avoidance, tax planning, really. But people get very confused. Tax avoidance is often okay, often frowned upon, but it's actually okay. It's legal. Tax evasion, on the other hand, is completely illegal and not okay. But what you can see down here, light tax avoidance, where you're gifting your partner maybe some shares in your company, maybe you're sending them some of your personal allowance, that's typically okay. That's allowable. However, there is also tax avoidance which is quite complex and planned, and the only reason people do it is purely to save tax, when the law, it wasn't designed to allow you to do that. So there are a lot of accountancy practices and firms out there who will come up with these very convoluted ways of taking money without paying tax. But the problem with them is, even if you're following the law and technically you're not breaking the law, you actually have to declare that you're part of one of those tax avoidance schemes to HMRC. So even if I saved £100,000 in tax, that's great, but I've now got to I'm legally required to tell HMRC here that I'm part of a tax avoidance scheme. And obviously, when I tell them that, they'll go and investigate that avoidance scheme and they'll look to shut it down. On top of that, they normally take you to court as well, and they win something like 9 out of 10 cases. So tax avoidance schemes are a funny one nowadays. I think the heyday of tax avoidance in the UK for smaller individuals anyway is gone. For big corporations, it still goes on, but for smaller individuals, it's a little bit more difficult. Are you acting in capacity on behalf of someone else? So if you are filling out your partner's return, then this does not apply to you because they're going to be signing it off. This applies if you have legal capacity over someone else. So again, if you look in the guidance, it'll tell you these will be exceptional circumstances. So they're not going to apply to most people, but if you have legal capacity over somebody else. Now you can see we're onto the fill in your return section on the right hand side. We're onto section 4 here. We've finished tailoring our return. So if you scroll down, you can see these sections at the top we've actually completed. They're highlighted in blue and they say entered. And then we've got a load of sections which are grayed out, which we need to run through now. And we need to actually start entering the details onto our return. Again, the return that's been generated only includes the sections you can see. Self-employment has been generated. It only includes the sections that we need to complete. So I don't have rental income. I don't have employment income. So the government gateway has not generated those sections of the return. Now, the next thing to do is actually to skip past the sections that you've already entered. We're happy with those, and you can click on the top blue link that is next to the first section that is not entered. And now we can enter the details, in this case, of our self-employment. So details for Trader UK, which was the name that I gave of my self-employment. First question. Did you have an annual turnover of £85,000 or more? So we were already asked, do we have a turnover of more than £1,000? And remember, that was because of the allowance. You don't have to tell HMRC if your total turnover from all self-employments is under £1,000. And now we're being asked, is our turnover more than 85,000? They'll usually ask this because 85,000 is the VAT threshold. So if you cross 85,000, then you need to register for VAT and complete what are normally quarterly VAT returns. It's also worth being aware that you actually need to register for VAT at the point you realize that your turnover is going to exceed £85,000. So if I've only received £10,000 so far in the tax year, but I know that next month we're expecting to do 100,000 of income, I need to register now. I don't have to wait until I've exceeded that 85,000. I know next month I've got enough income coming in that I'm going to exceed the threshold, and I need to do it now. So just bear that in mind. You're then going to see a number of tick boxes which you'll need to work through and read and tick any boxes that apply to you. Most of these, again, are quite rare, but they're trying to find out if you're entitled to any additional allowances and exemptions, and any additional sections of the return that might need to be completed. At the bottom of the page, I would say the most common three would be the three at the bottom. So my total turnover is £1,000 or less from self-employment, but I wish to voluntarily pay Class 2 national insurance. Class 2 national insurance is what contributes to your pension, your state pension. So you have to make X amount, I think it's 30 or 35 contributing years throughout your working life to get the full state pension. So even if you had less than £1,000 of turnover, if self-employment's your only income, you're not going to have to pay any national insurance in that case. In fact, you don't even need to tell HMRC. But by voluntarily telling them, you can make sure you get that qualifying year. And Class 2 national insurance is £3.05 per week. So a lot of people like to do that in that situation. Then you have my total turnover is 1,000 or less from self-employment, but I wish to claim back tax deducted under the construction industry scheme. I'm going to be doing a separate video on the construction industry scheme, very popular in the UK, but it's slightly different. It falls under self-employment, but there's a few caveats to it and works slightly differently. So if you are working under CIS, make sure you check out that video on my channel as well, as it will be more guided towards your circumstances. But typically under the CIS scheme, you have tax 20 or 30% deducted from, they're not really your employer, but contractors before they pay you. So you earn £1,000, they only give you 800. So in that situation, if you had less than £1,000 of income or turnover, they would have usually still deducted, if you had £1,000, they would still deducted £200 or £300 from it, and you might want to get that back, so you would need to tell them here. And then finally, my total turnover is 1,000 or less, and I have made a loss. So in the early days, if you have a self-employment, if you're making a loss, or in any days, to be honest, but if you're making a loss, it's a good idea to tell HMRC about that loss so that you can carry it forward and you can offset it against future profits. That way, you won't have to pay tax on some of those future profits. So good to stay on top of that and inform HMRC by ticking that box at the bottom. Those, I would say, are the three most common, but again, 99% will actually read through these and agree that none of them apply. So you tick that box at the bottom and move on to the next page. We're then given the chance to provide details of our self-employment. So description of the business, you don't need to go into great detail. For me, I would just write that this is a YouTube channel. You could say that you are an electrician, you are a plumber, you do landscaping, whatever it might be. You'll then see that you can enter the postcode of your business, but it's optional. Most of the time, for optional entries, I wouldn't provide any details. If it's not going to add any real value to somebody looking at this, then I wouldn't really provide. And that's an optional one, so I would usually skip over that. Has your business name, description, address, or postcode changed in the last 12 months? No. If you are new to self-employment, and this is maybe your first year, just because you've set up in the last 12 months doesn't mean that you need to tell HMRC here. It's only if you've actually changed those details. If you did start your self-employment here, then you can provide a date for that. Now, again, this is an optional one. However, this can have an impact on how much national insurance you pay. It won't impact how much tax you pay, but it can impact how much national insurance. If you remember, there are two types of national insurance that you pay on self-employed income. Both of them only kick in over a certain threshold. So if you have low income, you won't pay any national insurance, but it's typically class 2 and class 4. Now, class 4 national insurance is a percentage of profits over a certain amount. Typically it's 9 or it's probably more than that now, 10.5% or so on profits over a certain amount. And that will apply to all of your profits. Class 2 national insurance is that weekly amount, £3.05 per week. So if I put a start date here of the 31st of July, 2021, then we know that the tax year runs from April to April. So I've started my self-employment partway through the year. So they're only going to charge me that weekly amount through from the 31st of July. You won't pay 52 weeks times £3.05. You'll pay however many weeks there are in that period. Okay, I'm going to take that out. But if it is your first year of self-employment, just bear that in mind. The earlier the date is, the more times you're going to get charged that £3.05 per week. Did your business cease trading after the 5th of April 2021, but before the 6th of April 2022? Again, if you do cease trading, this is where you'll let them know. They'll also cut off that class 2 national insurance at that point, so it can impact the amount of national insurance you pay in your final year of self-employment. This can also have an impact on whether or not you need to submit a tax return. If your only income is from, the only reason that you're completing a self-assessment tax return is because you've got self-employed income and you say, I've ceased trading, then it's likely that in future years, HMRC won't actually ask you to complete a return. If you do have other income, though, maybe you have rental income, you have high employment income, capital gains, then they may still ask for you to complete a return. But just bear that in mind. If you do say that you've ceased trading and then they no longer ask you to complete a return, that's probably the reason why. The date your books or accounts are made up to. So technically, you can have any date here. You can put your birthday, you can put Christmas Day if you want, anything you like. However, the two most common options are the end of March 2022 to keep it in line with the end of the calendar month, as close as you can to the end of the tax year, or just go with the end of the tax year, which is probably the easiest way. If you use another date, that's not a problem. However, it can involve more work. The reason being, you have to then adhere to opening year rules, which again is an accounting concept, and it can result in double taxation. So for small sole traders, I would normally be recommending that the end of your accounting year is either the 31st of March 2022 in this case, or even better, the 5th of April 2022, which means when you're looking back at the transactions, your income and your expenses, it's exactly in line with the tax year. So you're just going to include anything from the 6th of April 2021 through to the 5th of April 2022, if that's the date that you decide on. Below that, you can see it also mentions, did you use the cash basis, which is money actually received and paid out, to calculate your income and expenses? Again, cash basis is normally something that I would recommend to small sole traders or small self-employments. The other option, if you say no to the cash basis, the option that you're selecting really is the accruals basis. Now, the accruals concept, again, it's accounting concepts, is that you include income as it is earned and you include expenses as they are incurred, which is not necessarily when they are received and paid from the bank account. The two can differ. If you think about it, under the accruals basis, I've got 5 days here in April. Now, if under my business model, I invoice at the end of the month, then those 5 days, I won't invoice them until the end of April, and I won't probably receive the payment until into May. So that means that we're not including those 5 days. Under the accruals concept, we should include them. Okay, so I would actually have to make an adjustment to my figures, and I would have to include 5 days of income. Even though I haven't received that money yet, I would need to include it in my accounts. So under the cash basis, it's more straightforward. So if it hasn't been received by the 5th of April, you don't include it. If you haven't paid it by the 5th of April, you don't include it. And again, that would vary depending, if you use the end of March, and if it hasn't been received or paid by the end of March, then you don't include it. Okay, so cash basis is purely when you pay a transaction or receive income. That's when you actually account for it and include it in your accounts here. Okay, so better for cash flow, as you're only paying tax on income that you've actually received, and probably more straightforward in terms of accounting as well. Next up, we have the income pages. So now we can really start to enter the figures, the income figures and the expenditure figures. So first up, we've got turnover, takings, fees. So how much income, how much revenue did you generate? In this example, I'm just going to make up a number. We'll go with 50,000. Below that, we have any other business income. Now, you do not include self-employment income support scheme grants, but you do include other support payments such as coronavirus job retention scheme. So maybe if you're self-employment, you are an employer of other people, you may have received coronavirus job retention scheme payment. So I'll enter 5,000, again, a made up figure, but we'll enter that in here. Trading income allowance. Now, if you remember at the start of the return, if you had revenue or turnover from self-employment's under £1,000, you didn't actually need to declare it at all. You didn't need to fill out a return, or this section of the return anyway. That's because of the trading income allowance. It's £1,000. So if your income is lower than £1,000, then it's covered by the trading allowance anyway. You can also use the trading allowance at any point as a replacement for your expenses, for your allowable expenses. So the easiest way to work out if this is going to be beneficial for you or not is to total up all of your allowable expenses. If they are lower than £1,000, which wouldn't be much, to be honest. If they are lower than £1,000, let's say I only had £500 of expenses, then you replace them with the trading allowance usually. Okay, and that will bring your income down by £1,000 instead of the £500 that we had in allowable expenses. But remember, it's one or the other. You cannot use both. Now, of course, in that situation, if I have allowable expenses, let's say of £10,000, then I don't want to replace them with 1,000 of trading income. I want to use that 10,000 instead to reduce my profits down and therefore pay less tax. Okay, so I'm going to go with 10,000 of expenses here, so we'll leave the trading income allowance blank, and then we'll move on to the expenses at the bottom here. So with your allowable expenses, assuming you've been through and you've pulled out anything that is allowable and you've totaled them all up, you have two options. You can either proceed and provide a detailed breakdown. So if I save and continue, let's say I have 10,000 of expenses. Maybe I've got 1,000 of costs of goods. Maybe I've got 1,000 relating to vehicles, 1,000 of wages and salaries. And you just work through here and you add in anything, splitting it out by type, giving a detailed breakdown. The other option is to go back one page and provide a single total, which I always think is much easier. Let's say £10,000 of expenses. You don't need to give any breakdown in that situation. You just enter a single figure. So for me, if you're just totaling up as a self-employed individual, if you're totaling up your income and your expenses, that's the absolute minimum you need to do. If you are producing a set of accounts, that's not actually a requirement for a self-employed individual, but if you are producing accounts and you've got everything broken down into different sections already, then you can provide a detailed breakdown. But for most people, a single figure will be sufficient. Now we're on to capital allowances. So capital allowances and balancing charges for Trader UK. Capital allowances refer to capital items, which are normally your larger items. If you think about your trading business, most of your expenses that we entered on the previous page, the 10,000 figure, would be day-to-day running expenses, maybe mileage, fuel, utility bills, buying materials, that type of thing, the running of your business. But capital items tend to be your larger items. Maybe you have to buy a property, maybe you have to buy a car, a van, maybe you have to buy machinery, larger items, and they have separate rules for this. So if you do incur capital items, they should really be entered on this page rather than being included in the previous page, the 10,000 that we entered. Most smaller items that you buy, I bought, for example, a computer to use, which I'm using today. So most smaller items will actually qualify for annual investment allowance. Your annual investment allowance, if we look at the details, is around £1 million a year. There you go, £1 million per year. So providing you don't exceed that allowance, which is quite unlikely, you can claim annual investment allowance. That will normally apply to things like laptops, computers, any tools that you buy, equipment, some vans as well it will apply to, but doesn't normally apply to cars and to property, that type of thing. Make sure you go and read the detailed guidance here. But for most people, most small self-employments, any capital items that they buy will actually qualify for annual investment allowance. So you would enter them in the top box here. I can't guarantee that will be the case for all of your capital purchases, but certainly computer equipment, tools, some machinery would all qualify for annual investment allowance. And again, you can go and look at the detailed guidance that they provide here. I'm going to include the £2,000 computer equipment that I purchased in the top box here. I would normally say that with capital allowances, it is quite a specialist field. And if you are making a lot of capital purchases, normally I would involve an accountant in that process to make sure you are getting the claims right. Because after that, if you have any expenditure that doesn't qualify for annual investment allowance, let's say you had 10,000 of expenditure that goes in down here, then typically you won't get to include that full 10,000 in the first year, in this year. What happens is that 10,000 gets spread across a number of different years. Okay, so it becomes a little bit more complicated. You need to keep accounting records. You need to write that asset down at the appropriate cost. So normally involves an accountant. But we'll just go with the 2,000 of annual investment allowance. Now, I've just quickly skipped back to the capital allowances page here, just to make something very clear. This page here actually only applies if you are using the traditional method of accounting, which I referred to as the accruals accounting, the accruals concept. If on the previous page or a couple of pages ago you selected that you are going to use the cash basis, and technically you can ignore this page. They should really blank it out once you've selected that, but they don't. So if you use the cash basis, you don't actually need to worry about capital allowances. And if you did have any capital expenditure, this 2,000 would actually get added on to my 10,000 of allowable expenses, and you would just leave this page blank. It won't actually have any impact in this example on the amount of tax payable, but technically that's how it works. If you're using cash accounting, you don't have to worry about capital allowances. If you're using traditional accounting or accruals accounting, then this is the method that would apply. I'm going to leave it in here, even though I selected cash accounting. Like I say, it won't have an impact on the amount of tax payable. And I've just used it really as a demonstration to show you how this works, whichever method you would use. And I hope that makes sense. Other tax adjustments for Trader UK, there are a few additional adjustments to make. So if you take any goods or services out of your business for yourself, then you do not get tax relief for them. So you have to adjust for that here. If you totaled up that you took £1,000 worth of materials, maybe to use at your home, from your self-employed business, you have to adjust for that. You have to allow for it, and you would do that by entering the value of the goods or the value of the service in the box here, assuming that you haven't paid your company for them. Self-employment income scheme grant gets entered here, only the ones that are received in this particular tax year. That's why they told you not to include it in the previous boxes, because it has its own entry here. And then finally, you can see this is the figure after the adjustment for the capital allowances, after deducting allowable expenses. This is what we're left with, and this is the figure that they'll apply tax and national insurance to. Loss brought forward from earlier years. Now, if you had a loss carrying forward, so maybe in the earlier years of your self-employment you were trading at a loss, if you had reported that to HMRC and carried it forward, you can utilize that loss against any profits in this tax year, and obviously you won't have to pay tax on any amount that is covered by an earlier loss. Again, that's where you would enter that carried forward loss. Any other business income not already included. So again, this is HMRC's way of clearing up anything that has maybe fallen through the cracks that you haven't included. You would have to enter it here, but quite unlikely. And then we can move on to the next page. Losses for Trader UK. So this page applies more if you are trading at a loss in the current tax year. So if my YouTube channel made a loss, or if your self-employed business made a loss, you would normally deal with that here. So the loss from this tax year that you want to offset against other income. Now this applies where maybe you have employment income as well as a sole trader business, a self-employment, and maybe your self-employment is making a loss, but you're paying tax via your employment. you can actually offset your loss, your trading loss from self-employment, against that employment income, or maybe it could be any other type of income that you pay tax on. You can do that by entering it in the top box here, the amount of the loss, and you actually often get a repayment of tax, maybe from your overpaid tax in your employment income. Okay, and that's how you would do it in that top box. Loss to be carried back to previous years and set against income or capital gain. So let's say this is your first year of self-employment and you've made a loss. In previous years, you had worked as an employee. You can actually carry this year's loss back and offset it against tax that you paid in previous years. So again, you would end up getting a repayment of tax in that case. And again, that's where you would enter details or the amount of the loss to do that. Total loss to carry forward after all other set-offs, including unused losses brought forward. So if you have been bringing a loss forward, carrying a loss forward, maybe you utilize a little bit against this year's profits, but you've got more to carry forward, then you can enter it in the bottom here. If you made a loss in this tax year and you want to carry it forward again, you would include it in the bottom here. And then in the next tax year, hopefully you make a profit and you would offset it by entering in the top box here. Tax deducted for Trader UK. Now this page is actually relevant for construction industry workers who work under CIS. Again, I'll be doing a separate video, so make sure you go and check that one out if CIS applies to you, as that's going to be a little bit more specific for your circumstances. But this would apply if you've been working under CIS and you had 20 or 30% deducted at source. If you earn £1,000 under CIS, you don't get £1,000. The contractor will hold £200 or £300 and pay you the net amount. So you enter any tax that you've had deducted in this box here, and that will ensure that, well, first of all, you don't have tax deducted again, but also that you get a repayment. Often, if you're a CIS worker, you end up getting part of the tax repaid to you. Class 4 national insurance contributions. There are a number of reasons why you may be exempt from Class 4 national insurance. So typically, if you're over the state pension age, if you're under 16, if you're not resident, if you're a trustee, they're all detailed here. Unfortunately, for the vast majority of us, none of these will apply, and we'll have to tick none of these apply at the bottom, in which case we will have to pay Class 4 national insurance as expected and save and continue. We're also given a little bit of white space here for Trader UK. So this is white space for Trader UK, and this will make more sense later in the video. Here we can give any other information that we believe is relevant to our self-employed business. So if you think it's going to help, then you can put a little bit of information in here. I will leave mine blank and I'll continue. It's not a requirement to give information. And then we have a summary of our self-employed business. So we've got the 55,000 of income, which remember was 50,000 of turnover plus 5,000 of grants. We have 10,000 of allowable expenses, which leaves us with a profit of 45,000. We also adjust for those capital allowances because I had 2,000 of computer equipment. And that brings us down to 43,000 of total taxable profits. And that's the figure that we're going to get taxed on. Scroll to the bottom and continue. Class 2 national insurance contribution. So you pay Class 2 national insurance. Remember, this is the £3.05 per week. If your profits are more than £6,515, in this case, of course, they will apply. And just remember, if you had started partway through the tax year, maybe halfway through the tax year, they're only going to charge you for whatever it is, 26 weeks rather than 52 weeks, okay, depending on the date that you started your self-employment. So at the bottom as well, if you remember, I mentioned that some people might want to voluntarily pay Class 2 national insurance. Well, this is your chance to do that. I would point out, though, this normally only applies or is normally only beneficial where self-employment is your only source of income. If you have income or self-employment is your only form of tax-paying income, if you have employment income, let's say, and you are paying national insurance through your employment, then there would be no point in voluntarily paying national insurance or class 2 national insurance via your self-employment, because you've already got the contributing year for pension reasons, for state pension. So this normally applies if you're not paying tax elsewhere, then you may want to voluntarily pay class 2 national insurance, so you make sure you get the contributing year for your state pension. I'll say no though, as I'm going to have to pay it anyway. Underpaid tax included in PAYE coding notice. Now the next few questions, you're just confirming this figure here. If you have received notice from HMRC, then this figure may be different, but for 99% of people, it's going to be a 0, and we're just confirming that we are happy with that. Again, you can see a 0 here, amount of estimated underpaid tax for the tax year to be included in your PAYE tax code, 0. Yes, I agree with that because I haven't had any notice that it would be different. And then finally, amount of outstanding debt included in your tax code for 21-22. I'll enter a 0 because I haven't received any notice of anything different. Now, claiming a repayment for overpaid tax. This has changed recently. Previously, you would complete your return. If you were due a repayment, if that's what the return told you, then HMRC would send a payment to you via check or via bank details, which you could enter on the return. It's recently changed, I imagine, because of scammers and fraud. Now you have to complete your return, then log back into your account, and then follow a link to claim a repayment. You have to answer some additional security questions to verify your identity, and then they will make the repayment to you. Quite clearly, the reason they have introduced this is because if somebody had your details, your login details, they could log into your account, fill out your return, make sure it results in a big repayment, enter their bank details, and then the payment would get sent to them. And there's nothing you could do about it at that point, and nothing HMRC could do about it either. So clearly they've had to put in additional security. I don't know why they haven't done this years ago, but they've done it now. So if you are due a repayment, make sure you log back into your account to actually claim that repayment. And I don't think the button will actually appear on your account until that 72-hour period has actually passed. If you have not paid enough tax, so if you have a tax bill, but it's a fairly small tax bill, below £3,000 in the 21-22 tax year that we're reporting on, then you can actually make a claim so that HMRC will deduct that tax via your tax code. So maybe if you've got employment income, that would be quite useful. Rather than paying your tax bill in a lump sum, you can just say to HMRC, yes, I want you to collect it via my tax code. They'll adjust your tax code and you'll pay a little bit every month via your employment. Your employer will deduct more tax from you to cover this liability and your usual liability. At the bottom as well, we have a very similar question, but this one is referring to the current tax year, the one that we're actually in now. The one we were reporting in has finished, 21-22 is finished. We're into 22-23 now. So they're saying, if you think you're likely to have a tax bill in the 22-23 tax year, do you also want us to collect that via your tax code? And again, you would say yes here to do that, but we'll say no in this example. Adjustments to tax due. Now, I've probably completed in the thousands of returns, certainly more than 1,000, I would say. I don't think I've ever entered anything in any of these boxes here. But again, you can read the detailed guidance of why you may have adjustments to previous tax years, but 99.9% of people, this will not apply, and you'll be able to continue on. Don't enter anything in those boxes. Any other information? Does this return contain provisional figures? Now, you don't really want to submit provisional figures to HMRC. You want to give them the final figures. If you do submit provisional figures, maybe this will be beneficial if you're at the end of the tax year or the end of the submission deadline. It's due tomorrow and you can't get the final figures. It's better to put in a provisional figure and then come back to it to avoid any penalties, late filing penalties. However, if you do say yes here, then HMRC will likely expect you to come back and revise your return. So just bear that in mind. And then finally, we have a bit more white space, but just know this is just a general one. It doesn't apply to self-employment. It's general information that may be useful to the return, so you could add in some additional details. And you're also provided with an opportunity to attach documents to your return. Now, this is only my personal opinion here, but I always think millions of returns are submitted each year. So HMRC don't have enough staff to look at every single return that goes in. So typically there is an algorithm that looks at them and it will just flag up. If something looks a bit funny, maybe a huge profit or a huge loss, a massive repayment that is out of line, then it will flag up and that will get reviewed by a caseworker. But the vast majority will just go straight through the algorithm. If you start attaching documents, then I would imagine the algorithm would struggle to review PDF documents and Excel documents as well. So I would imagine if you're attaching documents and adding a lot of notes to your return, then HMRC are more likely to pass that to an actual person to look at. So by doing that, in my opinion, you're more likely to have someone actually look at your return. We now have the opportunity to check our return. We're up to point number 5 here. Check your return. And this is just a chance to make sure of the sections that we needed to complete, we've actually entered something in all of them. And if you needed to go back to a certain section, maybe the self-employment pages, you can go back in and make amendments by clicking on the link. I'm happy that I've entered everything I need to, so I'm going to progress on to the next page. And you can see we're now on number 6, view your calculation. So initially we have a summary calculation. It doesn't give us much detail, but it tells us how much tax we need to pay and by when. So to go through this is the total amount of tax payable for the 21-22 tax year. My liability is £9,094.88. However, you can see below that they've also added on a first payment on account for the 22-23 tax year. That's the current tax year that we're still working through, as the date today is the 18th of April 2022. The way this is calculated, this is usually 50% of the 21-22 total. There is a slight difference because you actually, in the first year, they will deduct the class 2 national insurance from this figure, which is about £150, and then it's 50% of that. Okay, but typically this will be 50% of the above figure. The reason they ask for this, and a lot of people get funny about this, is if you think about your 21-22 liability, which is due on the 31st of January 2023, the 22 tax year ended on the 5th of April 2022, and you're not paying that tax until the end of January 2023. That's what, 8-9 months later. So you're well in arrears there. Your first payment on account for the 22-23 tax year will cover the first 6 months of that tax year. So from April 22 to October 22. And that first payment isn't actually due until the end of January 2023. So again, you're still actually a few months in arrears there. A lot of people think that, why are HMRC making me pay this up front? Unfortunately, they're not. You're just catching up. What a lot of people do in their first couple of years of self-employment, they don't pay any tax. So we're playing a bit of catch up here to get you back in line. You're still in a better situation than someone in employment who has to pay tax weekly or monthly. You're still actually in arrears here, but this is you playing catch up because you probably haven't paid any tax for the first year or 2 years of your self-employment. So you can see here the total that needs to be added is 13,000, which is my liability for the year plus my first payment on account, and that needs to be paid by the 31st of January 2023. My second payment on account is due by the 31st of July 2023, and again it's half of the total up here less the adjustment for national insurance. What this means, though, by the time you get to next year's return and you fill out your 22-23 tax return, you will have already made 2 payments on account. So it's likely that you won't actually have much tax to pay next year because you've already covered most of it via installments. Now, if we go to view and print your full calculation, you can actually see here the more detailed breakdown of how your tax was calculated. We have the 43,000. We have the personal allowance is being deducted, so you don't pay any tax on the first 12,570. You have 30,430, which is therefore subject to tax. And then you can see how tax has been applied. Mine at 20%, it could be at 40, 45 if you're a higher or additional rate taxpayer. You can see how national insurance has been calculated. And then you can see again the summary below with the payment on account, the amount that needs paying by the 31st of January. Now, if you're not happy with this amount, if you think that you're going to earn less money next tax year, maybe you're going part-time, maybe you're going to start working via CIS, which means that tax will get deducted by a contractor before they pay it across to you, then you can actually adjust your payment on account, but you need to have a reason for it and you need to try and be accurate with it. So if we save and continue, you then get an option. Are you claiming to reduce your 22-23 payment on account? Let's say yes. So you can overwrite this. So if I think, do you know what? I'm not going to earn as much money next year. I think my tax bill next year will be £2,000 rather than £9,000. Then I can overwrite this here. So I can make sure each payment on account is £1,000, which means by the time I get to next year's return, I will have paid £2,000, and that will line up with my tax liability. You have to give a reason. Again, you might give the reason, I will only be working part-time next year. You could say, next year I will be working under CIS, and they will understand what that means because they know that tax gets deducted already. But you need to be accurate, because if you get that wrong and you underpay your tax for next year, HMRC are going to charge you interest on that. So if you think, well, I'll just reduce it down to 0 and then I'll sort it all out next year, then HMRC will charge you tax on the full amount. So be careful of that, but that's how you would make the adjustment. You're then given the opportunity to save your return. Typically, I don't actually save a copy of my return down, but you could save it or print it even. The reason is because you can always log back into your account and you can view your old tax return. So I always think that's my copy if I need access to it. But if you need to, then you can save a copy there. You then have to sign a declaration to say that you have included all support payments, coronavirus support payments, and that the information that you have provided on the tax return is correct to the best of your knowledge. Okay. Once I click submit on here, it won't actually submit the return yet, but if you click submit, it takes you through to the login page again. You would enter your login details, including your password, and then your return goes across to HMRC. So at this point, nothing actually goes across until you actually click submit, re-enter your details and send it across to them. What I would recommend is once you submit your return, you're given a reference number, a great long submission reference number. Take a screenshot of that. That's useful if for some reason when you submit your return, it gets lost or you have a problem and it doesn't make its way across to HMRC, then when you call up technical support, they would ask for that reference number. So it's good to have a note of it. That was how to submit the 21-22 self-assessment tax return. Please make sure you subscribe to the channel and like the video if you found that useful. Thank you all for watching. See you next time.